welcome. My name is Bradley Amoyles. I am the lead portfolio manager for Pengana's Axiom International Ethical Funds. The purpose of this video is to give you an update on fund performance, some market changes and moves, and an update on the outlook. To begin with, the first 4 months of 2020 have been a rough time for markets. For us, in the growth equity space, we have underperformed. In general, growth equities have underperformed the broader equity market by about 15% during this period. For us, as a result of this, we will make some changes and have made some changes in the portfolio. But importantly, really to emphasize, we've done this for many decades. We've been through these short periods where external factors trump the micro, trump the work that we do on dynamic gap, and our stocks underperform. But history shows that after these periods, we tend to rebound with a nice catch-up move. In terms of the portfolios, the changes that we have made are really as a result of the growth around the world slowing. It's meant that we've reduced some of our more cyclical positions, primarily in the consumer discretionary space, where the consumer is certainly under more duress as a result of prices and Fed hiking, notwithstanding a good economy and a good jobs environment. In terms of the other cyclical area that we've reduced some of our exposure is in the semiconductor space, where notwithstanding these companies doing very well, continuing to step over the bar, we're starting to get that little bit closer to peak earnings and feel that it's appropriate to move away from these names. Other changes that we've made in the portfolio have been a couple of additions that have really benefited from this volatility and the Ukraine war, as well as some changes in the environment. One example would be Costco Wholesaling, a global shopping club that I'm sure you're well aware of, where they have a membership model and where they're particularly advantaged when people choose to try and save money on gas and come to Costco to do that and the rest of their shopping. The name has been a new addition to us and is adding performance. An additional name that we've added is Nutrien. This is a fertilizer company in North America, primarily focused on phosphate and nitrogen fertilizer. The prices of these commodities have moved up significantly as a result of the Ukraine war, and Nutrien has guided up and announced multiple price hikes, which are very helpful for the outlook of that business. In terms of the general outlook for the markets, more broadly, one of the takeaways in these volatile markets that we can be relatively certain of is that global growth is going to slow. That actually provides an opportunity for what we do at Axiom as dynamic growth investors. Importantly, I'll take you back to the 4 Ds, which are demographics, debt, deglobalization, and disruptive change. In terms of the first two, the demographics and the debt burden. Demographics clearly slowing, COVID accelerated that, so populations are aging and demographics are slowing. Debt clearly at all-time highs, post-World War II peaks, and that really means that those two act as a brake, as a deterrent on global growth. And we are focused on using this to our advantage. It means that monetary policy is not as effective, and it means that the overall cadence of the economy is going to continue to decelerate in the long term. On the other hand, the latter 2 Ds, deglobalization and technological disruption, continue to be big drivers of our stocks and our portfolio. Deglobalization means that people are moving from just-in-time distant inventories to just-in-case local inventories. It results in additional spending. For example, semiconductor factories being onshored, lots of spend for equipment like ASML manufacturers and their steppers, particularly adding to facilities, be it Intel or TSM in Texas. So those are big drivers for our portfolio. In addition, in terms of disruptive technologies, those continue to occur. And for us, we're always looking to find companies that are benefiting from that. More recently, there have been new enhancements in type 2 diabetes treatment, these GLP-2 inhibitors, particularly by companies Lilly and Novo Nordisk. And they're introducing these as weight loss products, a once-a-week shot, something that really adds to the addressable market and is a very dynamic new space for these companies who have traditionally been in the insulin market. So really, I'll leave you with the outlook, even though volatile and uncertain, for our approach and our focus on growth investing remains good. In fact, the aggregate portfolio, the metrics have declined as markets have moved down, and our relative valuations have improved. Our PE multiple is now only 20% higher than the market, and even more importantly, what we pay for this growth, the PE to growth, has dropped from over 2 to close to 1. So I am confident, as we've done before, that in the remaining months and quarters, we will step ahead. We will do what we've done in history, and we will show that value will underperform and growth will step over the bar, and we will be able to recoup these losses. I appreciate the time and appreciate your support. Thank you very much.